Let's talk about individual stocks then. We have Triveni Turbine. The company joins in now as they've reported a mixed set of numbers in the fourth quarter. The margins did improve, beat analyst expectations, but revenues and net profit missed estimates. Nikhil Sawhney, who's the vice chair and CMD of the company, joins in to discuss this quarter gone by in more detail. Thanks a lot, Nikhil, for joining in. The fourth quarter, the quarter as it were, if you could give us a sense of how you're seeing this year pan out. What's your prognosis on revenue, volume, and margin growth in FY26?
Well, firstly, a very good morning to you. Thank you for having me on. The FY25 and the Q4 that just finished was actually a record quarter, the 17th record quarter for Triveni Turbine. Not only have we achieved the highest turnover of any quarter, the highest profitability of any quarter, but the overall growth of order book as well has been very robust. We had over a 21% increase in revenue for the year, over 33% increase in revenue for in profit after tax for the year as well. But at the same time, we had an over 26% increase in our order booking. As a company that operates in the engineer-to-order capital goods space, we work off an order book which gives us visibility into the revenue in the coming quarters. And given the fact that we are starting the year with not only a record opening order book, but the fact that we actually had a very strong growth in order booking in the previous financial year gives us good visibility into the growth for the coming year. More than that, we operate with an inquiry book, and the inquiry book has been quite resilient as well, which gives us visibility into future quarters and future years' growth in terms of revenue. The margins, of course, are dependent on the revenue mix, which is dependent on the percentage of aftermarket as a percentage of sales versus the product itself, as well as where the products are being sold between the domestic market and international. And all of these factors have actually contributed quite well to the margin level of the company, as well as the visibility in terms of profit growth.
All right. Hi, Nikhil. Good morning. Nigel on this side. Good to see you on the show. Thanks a lot for joining in. Well, the market likes your numbers, but they would definitely like to know more about the future. So as you said, aftermarket services, they constitute a particular percentage of the mix. How much is it? If you could tell us that, point number one. And you ended FY25 with margins around that 21-22% odd. Scope for improvement from here?
Yes, the PBT margins were somewhere in the region of about 21-22%. Our tax for this year rate was a little bit higher because we had certain losses in our US subsidiary, so therefore the margins and the entire profitability is a testament to the underlying strength that Triveni Turbine has, regardless of the investments that we are making in terms of opening up newer markets. So given that fact, aftermarkets as a percentage of sales lies somewhere in the region of about 33%. And we are quite comfortable with it lying at that number. The reason is that we need to live with our customers for an extended period of time. Our products last anywhere between 25 to 40 years with customers. And so therefore, the ability for us to be fair with customers, not oversell and not overreach in terms of charging more is also quite important.
Right. So if you could give us a sense then, you said that your order book is strong, your inquiry book is strong as well. The last few years have been extremely strong. You crossed the 2,000 crore milestone on the top line this year as well. So you've been doing well. I mean, if I just compound your revenue over the last 3 years, it's been growing at a CAGR of over 35%. The question is that now the base having increased with all the levers that you have in place, do you see a 20% plus sort of revenue growth in FY26 as well? And what's your ideal proportion of exports and domestic and ideal proportion of aftermarkets and, pre-markets?
Okay. Well, firstly, the fact is, as I told you in my opening remarks, that our order book has grown by over 26%. And so therefore, that gives you an indication as to the growth forecast that we have for the coming year, which is more ambitious than the number that you laid out. So having said that, and given the fact that these are orders that we need to execute to ensure that we have a high degree of customer satisfaction, this is something that we are working towards in all earnest. Now, having said that, what is driving this growth is a mixture of new product introductions, new market segments that we've entered into, and ultimately investing far more into research and development. As a company that actually has a limited amount of capital employed, we are a much more research-focused organization in the mechanical equipment space. Asset turnover is somewhere in the region of about 6, and that gives you an idea as to how our return on capital comes somewhere in the region of about 45%. If I strip out cash from our balance sheet, our return on invested capital without cash would be somewhere in the region of over 200%. And given that fact, our focus is on people. Our focus is on developing products and solutions which are unique not only to the Indian market and the peculiarities of our customers here, but to ensure that we can be globally relevant. And so going forward, exports is a very important part of our growth strategy, to be able to be closer to our customers, but also to be able to cater to their requirements. Triveni Turbine operates in the space of industrial heat and power solutions. And as you may know, about 50% of end energy consumption globally is in the form of heating and cooling. And so for us to be able to capture a market share in the industrial heating and cooling space is incredibly important for us to be able to provide relevant solutions. We also did enter a new segment in this current quarter, which was, I would say, more than a developmental project, but a testament to our research and development. We sold a project to NTPC with our Italian collaborators on an energy storage system, which was based on a carbon dioxide-based turbine and a carbon dioxide-based subcritical cycle loop. We believe that innovations like this, which we will continue to do further off, will expand the market breadth and the reach that we have as a company to be more relevant in a space where ultimately solutions are required in a variety of different manners. As you know, you cover energy in a variety of different ways as a channel. To have an alternative to chemical storage, which is through thermal storage for batteries, is extremely important. And we believe as costs can come to parity with lithium ion, this will provide our customers with a variety of choices. And especially when you look at it from the perspective of long duration energy storage, these are solutions which will be very relevant for the market.
Okay, all right. Nikhil, give us a few more details. You like him or hate him, you can't ignore President Trump, right? Exports is a large part of your business. Could you tell us how much of it goes to United States? And because of the geopolitical tensions currently, is that posing a bit of a risk or is it an opportunity?
Well, firstly, the thing is that there's a degree of uncertainty in the market, and that is never good for predictability of orders. But having said that, Triveni Turbine, it has a localized presence in Houston in the United States. And so to that extent, we cater to the United States through our domestic subsidiary. We had hoped for the domestic subsidiary to be able to cater to the Americas, but we believe that at this current point in time, given the uncertainty, we would cater to it from India itself. I think that the bigger issue is the uncertainty around the Green New Deal in America, which was a large investment coming through a variety of different programs in the Biden administration, including the Inflation Reduction Act and the CHIPS Act, etc. And the uncertainty given that the Green New Deal has been extracted from the current administration's mandate brings up a little more uncertainty. But having said that, companies themselves are extremely keen to continue their path of decarbonization and achieving their climate goals. Having said that, a new market has opened it up to us in the recent past, which is the small modular reactor market, for us to provide heating solutions and power solutions for that. And we already have orders in the current quarter for that market. And we believe that will present a unique position for Triveni Turbine in the United States as well.
All right, final question before we let you go. Almost 1,000 crores of cash on your books. What's the plan here? You have return something to shareholders, buy some companies, or maybe that famed 6 times asset turnover ratio, use this to get to a potential revenue of 6,000 crores?
Oh, well, very frankly, we have an investor call later today, and I'm sure some investors will ask the same question. But we have a stated dividend policy to return in excess of 30% of our profit to shareholders. And I believe at this current year, our proposal is in excess of 35%. We believe some cash in hand is a good thing to have. Not only do we have liabilities in terms of our customer advances, which form a part of our cash in hand, but we are quite resilient with the amount of cash that we have. To your second question, in terms of inorganic acquisitions, we don't have any current plans, and we don't think that it suits our company's, what I would say, balance sheet metrics, both in terms of return on capital and return on equity, for us to pursue an active acquisitive strategy.
All right, take that point. Thank you so much for joining in. We saved your investors one question in the conference call, and I'm sure they have tuned into this interview to get an insight into what lies ahead for Triveni Turbines as well. The street likes it. It's a good mood for the street. And on your numbers, it's up nearly double digit for the stock.